I am Professor Johny Lira. I am here to show you how to backtest a trade strategy. Uh, we recently had the approvals of Bitcoin ETF, and there are good prospects to rise in the prices of the Bitcoin. Uh, in this video, I I gonna to use I gonna use the Python to simulate uh, investment strategy. First, this code, this line code, execute download of the prices of Bitcoin uh, relation to dollar. The initial date is this is this is initial date. This is end date. Uh, Here I create the column called by return. There is logarithm of variation between close and closing time t minus 1. Uh, this shift 1 shift the price 1 day, and logarithmic transform this division in something around the variation. Okay, uh, the cumulative return is calculated this way. Here I am to invert the logarithmic way to exponential way, and is executed the constant function, constant method for accumulated return. Okay, here I defined a stop loss in 2% fixed uh, to test some things. Okay, uh, I created a column uh, for the variation from close to low prices. This shows us how as risky is the operation, and I use it to verify if the price is less than stop loss. Here I create a column backtest return. This column is created by following condition. If the variation from close to low is less or equal to stop loss, then the value will be stop loss. And otherwise it will be the return in buy and hold return. Okay. The cumulative backtest return was created in that same way that cumulative buy and hold return, and this code is done in the plot. when we click in play, we can get to plot of Bitcoin backtesting. Okay, this backtesting is done from Bitcoin in relation to dollar, but it could have been in Bitcoin ETF. Okay, we can just see that the buy and hold log returns has a small multiplication factor of total return. It's due to the stop loss effect, but it's because I put in 2%. Let's go to see what happens if it is 0.5%. Whoa, we have a loss. In comparison to buy and hold log returns. And if I put stop loss in high level, we have same effect. If we put the stop loss very highly, then it's the same that buy and hold log returns, because it's as if there is not stop loss. Let me to test 3%, 4%, 2.5%. Okay.